Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. After the big break lower when the two pitchforks split this market back in October last year, we had seen some deviations lower to make a small sideways triangle, for example, over November and December last year, but overall prices had tracked sideways until 4 weeks ago. To discuss this, we must look back now 13 weeks ago when I said about the sideways movement of the market, and I quote, "I suspect this seeming sideways movement may not last, as coming in from above we have the declining short-medium moving average, currently at 16,815, which may well apply pressure on prices and cause an action or a reaction," end of quote. Well, in late January, it did, and the market fiddled with the short-medium moving average, and we had a reaction. Prices made a reactionary move back down. I said about this 5 weeks ago, and I quote, "So just think, if this was what just a declining short-medium moving average can do, imagine what the next, more powerful declining moving average might achieve." We now have the medium moving average, currently 16,905, dropping towards the frame. The only issue is the market is creating some support just ahead of the 2021 low at 15,665, and I am wondering if this will be enough to hold prices higher as the medium moving average moves down towards the market, end of quote. Well, I was wrong. The market rose up and shot straight up through the declining medium moving average 4 weeks ago, almost as if it wasn't there, and making a mockery of the supposed strength it might have. Indeed, prices used the medium moving average along with the June 2021 low at 17,095 as a base of support for a move higher, through the October 2019 high at 17,815, through the July 2022 high at 18,265. Thus, the large base of action formed over November 2023 to February 2024 had seemingly been enough to significantly turn prices higher. So what's next? Well, as I said last week, and I quote, "Next overhead is the June 2021 high at 18,610 and the August 2019 high at 18,850. But in between them, we have the gold highlighted slowly declining long moving average, currently at 18,620. Should these three be taken out, then we have little in the way until the September 2020 low at 20,045, end of quote. Well, last week you saw the market continue its moves higher, but it ran into a brick wall, with the declining gold highlighted long moving average currently at 18,620 and turned back down, such that we are lower than when I last spoke about this market last week. Now, I have been contemplating what sort of pattern this market is creating. And I said last week, my initial thoughts 2 weeks ago, which is now 3 weeks ago, my initial thoughts 2 weeks ago were to look at the early November 2023 to date action as a possible rounded bottom pattern. But the more I look at it, the less I like it. Instead, and I have not marked this yet on my daily chart, I am inclined to look at the whole early August 2023 to date action as a possible descending scallop pattern. This has merit, but it's very elongated, and that is a negative point. The main thing in its favor is a new pattern I suggested might be created 2 weeks ago, and which we have indeed completed, and that is a monthly key reversal up by some considerable distance. Thus, I'm looking now for where the hesitation would be for such a pattern on the top side. So I was ready to look for hesitation in this market last week, and guess what seemingly happened? We've had that hesitation last week, the one I was looking for. For the moment, I will continue paying attention to this market and see if this hesitation develops properly. I would just add that if we do have a genuine hesitation, then we could see a test down to the lows seen in February and November 2023, down in the 16,000 to 15,850 zone. LME 3-month zinc. The big picture here is based very much on actions originating from last year, with some limited skewing, I suppose, and recently a bit of battle happening. You see, we've had two competing shift pitchforks here. We have a late May, mid-August 2023 mildly bullish shift pitchfork, which is highlighted in bright red on my daily chart. The market is at the moment under the middle time, currently at 25.57, with all the moving averages clustered a little way underneath it between 24.71 and 24.98. This segues into the second pitchfork, the larger, very large, May to August 2022. That's right, a pattern that is a year and a half old. The May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. In this one, and it's a very important thing to know, in this one, prices late 2 weeks ago and then again last week and this week until today have punched down and out on the top side of this venerable pattern, up over the upper time, currently at 25.03. This has been the rub of the market, and as I said 3 weeks ago, and I quote, the upper time of the larger purple highlighted bearish shift pitchfork is now well within the smaller bright red bullish pitchfork. Indeed, they cross over on the unusual 29th of February this year, end of quote. And I further added, and I quote, I would now like to emphasize once again how this bearish shift pitchfork, which is now well over a year and a half old, I wish to emphasize how it is still working in the overall bigger picture to drive prices lower, despite the moves upwards during 2023, including the monthly key reversal we saw in December last year. One way or another, the times are being tested here. The question is whether the bright red bullish shift pitchfork will give way and we see prices move down through the lower time again, or will a bigger purple upper time give way and we have a whole new potential outlook on this market. As I said during January and February, we should know by the end of February, probably sooner, end of quote. Well, it took a little longer than anticipated, but prices did break higher and up and out of the purple bearish shift pitchfork. But they have not stayed there, and we are on the verge of a possible false break, with today seeing the market dipping once again below the purple uptrend, upper time I should say. The question now is what's next? Well, we have old congestion from February 2021 low at 25.47. And for most of last week, it looked like the market was stabilizing there. But this week, prices have dropped down below the red middle time and the purple upper time and into congestion of moving averages below. My concern that we may end up with a situation similar to the one we saw in LME 3-month nickel back in October last year, when two pitchforks ripped apart the market and neither came away from it unscathed. I don't think that is likely here just yet. As though we are dealing with the upper time in purple, we are still only dealing with the middle time in red. I'll have to wait until the end of April when the red lower time, currently at 23.93, exits the purple lower time to see such a resultant potential ripping apart action. LME 3-month tin. There are multiple major patterns still visible and still acting here on this daily chart. This year's actions has seen the market push back up from the stratified congestion bands below and over all the moving averages up to highs not seen since July last year. This emergence led me to a barely just possible pattern here, a mid-October 2023 to late January 2024 inverted head and shoulders pattern for dark blue highlighted neckline, currently at 26,570. I said 6 weeks ago, and I quote, "You see, I am not happy about this reverse head and shoulders pattern. I see myself trying a little too hard to optimize this pattern to the information available. And whilst it looks okay-ish, I'm still not happy about it, hence the moniker of a possible reverse head and shoulders pattern," end of quote. I even went as far as 6 weeks ago of laying out some potentials above, which have since become targets. Thus, we have had a primary target X in the 28,100 area, for secondary harder to reach target X1 up in the 28,895 area. This brings me to another pattern, and one related to the reverse head and shoulders, and that is a mid-October 2023 to date ascending wedge pattern. You can see this highlighted by two trend lines. The lower trend line highlighted in bright red and supported by the rising short medium moving average, currently also at 26,300. And the previously mentioned neckline, currently at 26,570, highlighted in dark blue on my daily chart. Now, this ascending wedge pattern, along with the reverse head and shoulders pattern, has given some additional potential targets above of a primary target X2 in the 28,360 area and a secondary hard to reach target X3 up there in the 29,600 area. Okay, so you may think that may be all, but there is a further final pattern that is developing, and it's related to the lower uptrend lower trend line of the ascending wedge pattern. I said last week, and I quote, "You see, it seems the ascending triangle pattern has morphed into another pattern, this time into a bull channel, a late December to date, December 2023, a late December to date bull channel, currently 26,300 to 29,065, end of quote. Now, to help aid seeing this pattern, I've highlighted the upper bull channel line, also in bright red, same as the lower bull channel line. As I said 3 weeks ago, and I quote, of all the patterns, I think this is the one to pay close attention to, as it's still fairly young compared to the others, but is also the most potent, end of quote. Well, a lot has happened in just 1 week here. We have seen targets X at 28,100, X2 at 28,360, and I'll also say target X1 up at 28,895 reached. Now, I'm calling target X1 reached. It was only $35 different after all the journey upwards from the high of yesterday. What has been extraordinary has been the influence of the upper red bull channel line, currently at 29,065. It has not only capped prices late last week and early this week, but has seemingly caused the market to fall off a cliff this week. The move lower is so violent that today, only the second day of this week, we are a good way towards making a possible weekly key reversal down. Let's say call it just a weekly key reversal for this week. Thus, to make it happen, prices would have to move down between now and Friday below 27,315, considering the low at the moment is 27,355. That's not a hell of a lot to ask. So we have to have moved down between now and Friday between 27,315 and then either close below 27,625 or over 28,675. Now, anything in between those two numbers, 27,625 and 28,675, anything in between, and would have a lesser outside week.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.